larger.
What do you think about commodities? Like, do you invest in silver or copper, something like that?
My problem with commodities is you can make more of them. I think you should trade commodities. You should, if you can produce them, you should produce them and sell them at a profit, so you can buy scarcities.
Yeah.
Scarcities are assets you can't produce more of that you love. Your family, your yacht, your jet, your home, right? Your Bitcoin. You cannot, things you're going to hold for 30 years. If you're going to give it to your son or your daughter, it's a scarcity. You should own it. If, on the other hand, who's going to save up a bushel of corn or wheat or nickel to give to their son or their daughter in 30 years? Yeah. The problem with commodities is human ingenuity and capital can produce more. And gold and silver are the apex commodities, but still, you can produce them. If you were to put $100 million in gold for 100 years and the miners produce 2% more gold a year, you're going to lose 85% of your monetary energy. Yeah. Because they're going to double the amount of gold every 35 years. That's the best case. They're probably going to triple or quadruple the amount of gold due to something akin to fracking or new chemistries. Or a smart hedge fund person is going to create a gold ETF that's fractionally backed 2-to-1, and they're going to hypothecate the gold and sell more gold derivatives or futures than there is gold. Or someone's going to counterfeit the gold. And all those things happen. So I don't think commodities are a good store of value. You might be able, with leverage and derivatives, to trade in the near term with high frequency and make some money. But for the average investor, are you going to hold corn or wheat for 100 years? Are you going to hold coal or oil or natural gas for 100 years? The bet is human ingenuity is going to find a way to produce more of that thing. And here's the problem. If the price goes up by a factor of 100, you're going to attract massive amounts of capital and the smartest people on earth to produce more of that thing. So if you're investing in commodities as a store of value, you're betting against human ingenuity and capital and self-interest. And that's not a good bet. Normally, that's the losing bet. On the other hand, with Bitcoin, if it goes to $1 million a coin, miners can't make any more. The only thing that's going to happen when it goes up by a factor of 100 is the security on the network is going to go up by a factor of 100. And by the way, and the value of the safe haven asset is going to go up by a factor of 100. Yeah. It's a positive feedback loop. It's reflexivity. The more people buy it, the more they're going to want it, the better it's going to be, the safer it's going to be, the less risky it's going to be, the more they're going to buy it.
Okay, so
you can't find that with a commodity.
Yeah. You know, the case for commodities is that people that we use it, that we use it for tech products, for mobile phones, for laptops, and so commodities will stay definitely on the radar for investors. And if we have a runaway inflation, people will look for a safe haven, and some of them look for commodities because people use it, people need it. It's limited.
Yeah, so I guess there are worse things to invest in than commodities.
Okay.
Right. So if you decided, you can probably come up with something which is even worse than a commodity. But the problem at the end of the day is that it's not going to accrete linearly, and it's not, the price of the commodity is not going to accrete with the expansion of the money supply and keep up with it, because it's not absolutely scarce. And as the price of the commodity goes up, the supply of the commodity will go up. The number of miners, factories, plants will increase. And as they increase it, they've got a vested interest to sell and drive the price down. So commodity producers are the enemies of commodity investors. Gold miners are the enemies of gold investors. And so that's the problem with commodities. You've got this tug of war of, is it a money, is it an investment asset, or is it a production? And ultimately, a lot of times with commodities, what happens is a government will go ahead and they'll invest in the commodity production and they'll run into loss to generate cash flow. Yeah. And that's the history. I studied commodities for many years. That's the history of all these commodities. Eventually, you have a producer that's overinvested, and they will run at a loss
Sure.
as long as they have a cash margin, because the alternative is to shut down the plant.
Yeah.
And so those commodity producers are going to drive your commodity price into the ground as long as there's positive cash flow for them.
Yeah.
And so you really want to store a value. You want to own the Mona Lisa in a world where there's only one. You need to own something which is truly scarce, truly desirable. You can't make any more of them, and everyone recognizes that it's valuable. And that's why gold might be better than owning cash. It's up 30% or something, but Bitcoin's up 160%. And the reason why is because gold has a leak in the battery. It leaks. If you have a leaky battery, a leaky ship, then will it get you across the ocean? Crossing the ocean in fiat currency is like stitching together a rubber raft with a leak. And crossing the ocean in gold is like getting on a wooden ship that's going to rot. It's going to eventually rot and sink in 80 years. Crossing the ocean in Bitcoin is like getting on a steel container ship, steel hulled, and it doesn't leak. And there are all different ways to get to your destination. The issue is with what degree of monetary integrity.
Yeah.
Commodities will have more monetary integrity than cash,
definitely.
but less monetary integrity than a pure synthetic crypto asset like Bitcoin.
Okay. What do you think about real estate? Would you invest in real estate right now?
The problem is half real estate is impaired.
Yeah.
Right? Like the amusement parks, the movie theaters, the shopping malls.
Yeah.
It's impaired, and so anybody's going to sell that to you is going to sell that to you with no use case at a premium. The other half of the real estate that's valuable has been trading like a bond, and as the interest rates went to zero and people refinanced that stuff at lower and lower interest rates, the cap rates went through the roof. And so it starts to look like a highly appreciated, inflated fixed income asset. And I think fixed income's at the end of the line because interest rates can't go much more negative. If interest rates can go negative, more negative, then maybe you can make that work. But I don't think it holds its value because you can't increase your rents at the rate of M2 monetary expansion.
Yeah.
No one's going to be able to do that. And theoretically, the entire civilization only needs about half as much commercial real estate as it used to have. Right? There's small shining lights, like maybe data centers, where there's increase in demand there. But what we've seen is a massive crystallizing collapse as part of the virtual wave, where a company with 1,000 employees now needs space for 300.
Yeah.
And people are working out of their home. And then the amount of retail storefront space in the U.S. has just been cut by a factor of 4. And we dematerialized a lot of real estate to the phone. It's like even with weddings and funerals, it's like you're going to go to the funeral on Zoom. It's like even cathedrals and churches are impaired assets as real estate. So there's a lot of impaired real estate assets. The rest is overvalued and it's not liquid.
So I would say you say no. Okay.
If you had a lot of money and you wanted to give it to your grandson 30 years from now, if you buy real estate, some politician may seize it or tax it.
Of course, they will.
If you buy gold, it's going to be cut by a factor of 2 to 4 by gold miners and hypothecation. If you buy a stock, you got to bet that they can grow faster than the central bank can print money.
Yeah. So
you buy Bitcoin.
Yeah, you buy Bitcoin.
And you hold it. And when the government decides to change the tax law in Germany, you send it to someone in Florida, right? Or you move to Florida and you take your Bitcoin with you because you can't take your skyscraper with you.
Send me your wallet address later, please, for the emergency. So what about tech stocks? You're a CEO of a tech company. What are your thoughts of the current stock market valuation, or especially of the tech stocks like Google, the FANGs, Tesla, and so on?
I think you've seen a huge surge of monetary energy out of fixed income in search of a store of value. And the first place they went was big tech.
Yeah.
And they went to the things they knew. They went to FANG because everybody knows them and they're familiar with them. And I think that trade worked for like 12 weeks. from March through middle of the summer. I think now we're at the point where the market doesn't know what to do, but they're just sitting as a store of value. People are using Apple and Tesla and Facebook and Amazon as a store of value because they have more faith in it than they have. By the way, it's not irrational because you can probably trust Apple, Amazon, Facebook, and Google to print less stock than you can trust your own government to print fiat currency, right? So if you're actually looking for a store of value, then they were everybody's best idea, and you could punch the button and do the trade quickly with your prime broker. But I think as we look forward, I don't think they're the same trade and the same investment thesis as they were a decade ago.
Yeah, definitely.
Because everybody agrees with you. It's a crowded trade.
Yeah.
And you might be able to find good investments, but I think it's 100 times harder. Like when I bought Amazon at $300 a share when it had already crushed 15,000 retailers, and it was trading at 2 times revenue, and it was growing 20% a year, and everybody on Wall Street hated it. And it was unstoppable, $300 billion business, but you could have bought it at 1/10 of what it trades at right now. It wasn't a hard decision.
No, it was actually, yeah.
All these big tech companies, they weren't hard. Apple, Google, Facebook, Amazon, they all had like 100 million to 1 billion users, and they were a monopoly, and no one was near to them, and they had economies of scale. Apple can ship a new product to 1 billion people in a weekend for a nickel. That was obvious in 2012. That was obvious with Facebook that they could actually change the way 1 billion people communicate in 2012. So there were obvious investments back then. I don't think there aren't that many obvious tech trades right now where you look at it and you're like, 99% of the world doesn't understand it. It's going to go up by a factor of 10. I'm going to buy this.
I have to mention, I initiated a mutual fund, and as soon as I heard the message that MicroStrategy buys Bitcoin, I told my fund manager, buy MicroStrategy. So we bought the shares of your company actually as a ETF on Bitcoin because we are not allowed to buy too much Bitcoin in Germany. So this is the second bet I made, and I'm really happy about it because it was like $120. Now we're way above 200. And yeah, I think that's what people can do. If they don't understand Bitcoin, if they're not able to buy Bitcoin in their country, they can buy a stock like Square. They invested 50 million in Bitcoin, or perhaps MicroStrategy or Grayscale.